Welcome back to Trials and Tribulations. We talk a lot here about legal issues, business issues, and how those two things sort of correspond. And today I'm talking with our Chief Risk Officer, the Chief Risk Officer of both Idea Financial and LevelEsq, Joe Salvatore. And we thought it was important to have some time to talk to Joe about what he does here, because a lot of this stuff goes on in the background. You know, we get a lot of applications from lawyers, a lot of applications from small business owners, and they wonder what is it that goes into the formula to decide whether they're going to be getting a loan from us, what their rate and term is, what the amount is. And Joe is the architect of the entirety of it. And what's interesting about Joe is not only is he a specialist in data science and risk management, but he also has a degree in behavioral psychology. So he could sort of mold all those things together to figure out what the right form and substance is for either a lawyer's loan or a small business loan. And so in order for you to better understand how that all works, we thought a good idea to talk to Joe. So welcome, Joe.
Thanks for having me. All right.
First, give us a little bit about, some of the things that have brought you to where you are today. A little about your psychological background, your background in risk, consumer and business lending, and how it all culminated for you to become the Chief Risk Officer here at Idea Financial and LevelEsq.
Yeah. So my background, my training is in, like you said, behavioral science, psychology specifically. I studied social psychology. A big part of studying human behavior, understanding why folks do what they do, is the statistical modeling. So I took a lot of statistics courses.
We're not going to edit that, by the way. We want this to be real.
I took a lot of statistics courses in graduate school and really became kind of enamored by that whole process of conceptualizing ideas, gathering data, building out the models to predict that behavior, and then inferring information from those results.
What's funny is, like, when we first started talking with you, I interviewed you through LinkedIn. I just reached out to you randomly. Yeah. You managed to get back to me. We were working out of some temporary space, and I guess by a leap of faith, you decided that you would be willing to come work with us. Most people that, at least my experience, do the work of data science or risk analysis and deal with all that mathematical stuff don't have much in the way of an outgoing personality. It's more of an introvert, right? But you've been a professor, you know how to deal with people. So it was sort of a unique pairing of the ability to deal with the people and talk with the business owners, but also deal with the modeling and handle the work of the data scientist. And so Where did that all come about? How did you learn to mold those two things together to be successful?
Yeah. So kind of combining the harder technical aspects with the softer skills. Definitely a part of working in a research lab, no question. Working with lots of different folks that have different backgrounds, whether they're undergraduates that were working with us or, graduate students from different departments, professors from, our program, from outside of our program. So you have to really be able to collaborate very well and work with different types of personalities to ensure that you get your projects done. And then, after I left academia, I left grad school about almost 10 years ago now.
Wow.
Yeah. I worked in, I thought to myself, I'm going to try industry. And if it doesn't work out, if I don't like it, then I can just go back to academia. My first job outside of school, I remember I did a project and I was working, it was for a bank. Worked at a consulting firm essentially. And I, did some research, had some pretty favorable results. And the conclusion was, let's try this project. We put the project into production. And I would say within 2 weeks, I had results back, and it was really, really exciting. And that's what hooked me in industry.
Well, what we've noticed here, for me, I'm the kind of person who I don't necessarily worry so much about all the details. I just want results. And you've been really successful here at being able to get those results, but also doing everything behind the scenes scientific. However, it's hard for us to explain to the outside, either small business owner or law firm, why it is that the rate that they got is so specific, or why the term is shorter or longer than what they expected. Or they may say, well, I wanted a $200,000 loan, but you're only giving us a $150,000 loan. And there's so much that goes into that. And it's not just the objective, but there's also I think, a subjective opponent that you've gotten very good at managing as well.
Yeah.
So, in trying to explain that, I know you've spoken with small businesses on occasion, or you've tried to deal with the underwriters or the salespeople to explain it. It's not an easy thing to understand. So how do you explain to an outside person who's never dealt with statistics, who isn't a psychologist, who doesn't manage risk, why? Why is it that they're getting the offer that they're getting?
Yeah. So I'll touch on a couple different aspects of this. There's certainly a subjective component. You can't be so rigid that everything needs to go through a model, particularly with businesses and law firms. It's complicated. In my past profession, I worked in the consumer space, a lot lower dollar amount loans, a lot less kind of personalization or kind of personalized or individualized offers. You kind of get what you get. And just imagine you go and apply for a credit card. The limit's the limit. $5,000, $10,000 limit, $20,000 limit.
You were selling Xboxes on consignment, basically, right?
Yeah.
I mean, that's not an easy business to manage.
Yeah. So, but the point is here, everything went through a model. There'd be, tens of thousands of customers coming in, and you can't have those sort of individualized types of offers. In small business lending, and particularly to law firms, it needs to be more flexible. So there needs to be a subjective component as well. The analytics side of it, how much you get, it's a function of your revenue. There's a pretty simple ratio that we apply given your credit risk. Credit risk is a combination of the principal's personal credit and the firm's credit or the merchant's business credit.
And also their cash flow and their revenue.
So cash flow would be the third component. How quickly deposits are coming in, the amount of those deposits, the frequency, if there's any kind of negative marks inside of the bank statements, like negative days or non-sufficient fund returns, things like that.
But so if we were talking to, well, actually, let me back it up. You make an interesting point about sort of three different tiers of experience that you have outside of the academic world. It's like the ultra high-paced consumer environment where there's tens of thousands of applications and there really is no time to individualize each and every offer. So it's like whatever the model says, it says, and it doesn't matter what the person's side story is. It doesn't matter what they tell you. You have to be very consistent because the volume is so huge, right?
Correct.
And then you get down to the small business side, which is what your original work is with us and your continuing work. Can be a little bit more personalized because the volume is a tad bit lower. It's still very high, but it's low enough to where you can still kind of get a story and maybe make some adjustments.
Absolutely.
But then we brought you into doing the risk side for law firms, which has an entirely subjective component to it. And what I mean is when you look at a law firm revenue is not the same as small business revenue. It's lumpy. It doesn't come in as often. But typically, lawyers and law firms that we deal with from an individual basis are very high credit, super prime.
Very much.
They pay all their bills. They don't miss their payments. So your model may say this law firm is entitled to $100,000, but they want $200,000. It seems to me from our experience that you're more willing to listen to the story on the law firm side than you would on the small business, and definitely more than on the consumer.
Absolutely, yeah.
And what's brought you to the point where you feel comfortable being flexible like that?
Well, just generally, what we're finding is law firms have better credit than the average small business that we see all across the United States and all different industries. When you look at that average credit, a law firm and their owners have, on average, better credit. So that makes us feel comfortable. We've worked with lawyers now. Some of our oldest customers in the general commercial portfolio are going on 5 years. A little bit over 4, and we've had really good results with law firms. Now that we've kind of migrated into the case financing space, it's given us some confidence to get a little more aggressive with offers or be able to kind of listen to the needs and try to mold offers that kind of fit the law firm's needs.
And it takes, like I said, it takes a lot more flexibility, I guess, in dealing with the law firms. Have you found it difficult? We kind of threw you at this and said, listen, man, we want to give these lawyers good offers. There's very little competition in the space. We want to be innovative and different because there really isn't much left to be innovative with in lending
Commercial,
and banking.
yeah.
But this is one space where there is an opportunity. Was there some discomfort there, or did you feel that there was a learning curve or anything complicated about getting into the legal lending space when it comes to risk?
Yes. Yeah, definitely some discomfort just because I lack the knowledge or experience in that space. I've spent now, the last.
Well, so do a lot of lawyers, though. Frankly, right? They pretend to have a lot of knowledge. Maybe they don't.
Yeah. I've spent like the last year and a half really thinking about law firms and lending to law firms in particular, and I've gotten a lot more comfortable with it. So yeah, that initial kind of hesitation, but a year and a half now into lending to law firms, and I have I'm a lot more comfortable with it.
Do you have any idea as to why banks, small business lenders in general, are so hesitant to lend to lawyers? I mean, you've seen the credit profile. You said it yourself that even the lawyers that we do have on our books that were not case financing, but were just small business, their performance is remarkable compared to others. Have you spoken with any industry professionals or done any research to figure out why it is that there's this innate hesitancy or almost refusal to lend to lawyers?
Yeah, I think part of it is just not taking the time to understand how a law firm operates from a financial perspective. If it doesn't fit the box, it's likely very costly to do those types of loans. So I think it's easier to just kind of, restrict that as an industry, which works out really well for us because that's a huge opportunity.
It is. And I remember when we first started Idea Financial, because Larry and I are both trial lawyers and we understand the way that the trial lawyers' books and records work, we understand the way the revenue works.
Right.
We know it's very different than a hair salon or a pizza place or a warehouse or anything like that.
Yeah.
We felt very comfortable, but even our own risk people, when we first started this business, said absolutely not. It's just industry standard. Nobody lends to lawyers. It's a restricted industry. We won't do it.
Right.
And we were sort of like taken back by that. It just didn't make any logical sense to me. I mean, we couldn't make any sense. Did you ever have the same hesitancy when you first started doing this about providing loans to lawyers just because of historical precedent or anything of that matter?
Right. Yeah, of course. Generally, when an industry is restricted across, other lenders, it gives you reason to kind of pause and think about, should we be doing this? If it were profitable, wouldn't everybody be doing this? So absolutely. But I think as we've kind of grown and evolved, it's become apparent and clear that it's just a lack of understanding of how to lend to law firms.
What's really, I guess, struck me the most, even as somebody who had practiced for 17, 18 years, after lending money to small businesses, when you ask a small business owner to provide you with a tax return or a profit and loss statement or anything in addition to just the very basic underwriting material, there's always a lot of pushback.
Yeah.
They don't want to do it, or the brokers that bring you the deal don't want to do it.
Sure.
We ask a lawyer for 2 years of tax returns, and oftentimes the response is, well, do you want 3 or 4 years of tax returns? The willingness for them to give you a personal financial statement, P&L, balance sheet, all that stuff, it really shows that you're dealing with folks that you want to do business with. Yeah. And that's where the real opportunity lies right there.
Absolutely, yeah. I love how organized lawyers are. And in law firms, they have everything available, everything's filed, all the documents are named appropriately. And we've had, really great kind of coordination with the law firms that we've been working with. And it's very seamless. Yeah, there's no pushback. And I think a lot of that might be in the general kind of commercial lending world because the small business owners are working and they're likely not focused on the clerical type of work. I think there's inherent kind of organization and clerical work in being a lawyer.
That's a good point, actually. You're right.
And so I think having that ready to send over, they likely had it filed already in the easy kind of directory where they could just go to and send it to us. I don't imagine that restaurant owner in the middle of the country has that same sort of organization.
Well, it may also be, and you make a good point, that lawyers and law firms are required by their bar organizations, their state bar, to keep their trust account in perfect working condition.
Okay.
All their case expenses have to be organized because they eventually have to show them to their client. So financially speaking, while lawyers may not be finance professionals, the basics of keeping their finances together is something that is a core part of the business. Whereas without the oversight that these other businesses don't have a body that's overseeing them in the same way that the bar is.
Yeah.
And that may be the reason and a good point as to why lawyers are so willing and able to provide you with the information. And that leads me to ask you, now that we've been doing this for a little while and we're looking to really expand the breadth of our legal lending program, if a lawyer is looking to apply with us, what are the recommendations that you would make to be prepared for that?
Sure.
in order for them to get the easiest and fastest experience?
Yeah. So, what we found is that, like you were saying, all of this information's basically on the ready. It's going to be your bank statements. Just need 3 months of those. 3 years of tax returns. The most recent year, a profit and loss statement, balance sheet, and then given it's later in the year to date as well for profit and loss and balance sheet. Potentially a personal financial statement, which you can get right from the website, fill it out, and then any supporting documentation for that personal financial statement. So if you have stock accounts, just the most recent statement from your stock account. If you have additional real estate, the addresses of those real estate, of those houses or structures, properties rather, and the rest we'll take care of, really. We have an underwriter that'll go through and verify all that information. If there's anything that we need, we reach out, and pretty seamless.
And so now I want to sort of shift a little bit and talk a bit about your role as Chief Risk Officer. Mm-hmm. What was your original role when you first started here?
Director of Data Science, but I do want to add that was sort of a misnomer because I was the only data scientist. So,
well, that means you're automatically the director.
There
right?
you go.
Yeah. So it made perfect sense. Yeah. Actually. Now, how many data scientists are there? 4 or 5 of these guys that are working for you?
Yeah, we have 4 here and another that's contracted. Yes.
Yeah, overseas. So we have a couple of different people overseas, people here. It's your first executive level position, so to speak, as a chief risk officer here at Idea Financial and Level. What have been your biggest challenges in holding that position, in monitoring and overseeing both the underwriting and the risk team and the data science team? If you were to tell somebody, okay, this is the stuff about my day-to-day that is the hardest part, what would you say it is? And if it's me, it's totally cool. You can say
Aside from that, we'll go into it, managing, I think, individual personalities, really, at the end of the day. And I do think that having a background in psychology has helped me with that. We're all coordinating to get things done, and so dealing with different types of people and making sure that everybody is happy and productive. That's a major part of my day. So I would say that's probably the most challenging, but also the most rewarding as well. I certainly miss kind of just working on my computer, coding away, building models, building software and things like that. Yeah, but I'm much more effective having the coordinating folks to do that. So I can only do so much myself.
I'm
right?
actually surprised that you would say that you missed that because I feel like the effectiveness that you have dealing with all the people that work under you and with you would bring out the highest and best use for you on a day-to-day basis. What is it about just being locked in that you miss?
Yeah, so when our team produces results that are favorable, producing those results, there's something very rewarding about it. Granted, I'm coordinating the team's efforts, but there's something really fun too about doing all of that research and then kind of really learning by doing. All of our kind of staff data scientists, that's what they're doing now. That's where I started as well. And every once in a while, I get my hands dirty again doing that. But
I feel like you do that all the time. I mean, one thing about this place that I find to be rewarding, at least for me, is that everybody at every position contributes to every person within the division. It's like just because you're the chief risk officer doesn't mean that suddenly you can't get down and dirty and code yourself.
That's very true. Yeah. It's not my day to day though anymore, and that is a part that I miss. There's working on a project for a few weeks straight. I couldn't imagine working on one project for a week or two straight. Right? There's always something else to do. Which that's another kind of challenging aspect, and you obviously know as well. I think you probably wear more hats than anyone here in every different department, right?
I just feel like I'm always learning. For me,
and that's a positive aspect of it. Yeah,
like people like you and Santiago, and who's our chief financial officer, and Alex, our chief technology officer. It's like I'm always learning from these people because coming in as a lawyer, there is absolutely no training as it relates to risk management, as it relates to finance. We talk about how lawyers are well organized, but they're well organized in the most basic areas of finance. They know how to keep their books. They know how to put together a P&L, but we don't know about capitalizing expenses or about putting
Yeah.
together a true GAAP accounting
Yeah.
financial statement. These are, and when it comes to risk management, I've learned a ton from you over the past 4 years or 5 years, however long it's been, because it was, again, nothing that I had ever been exposed to. And it actually oftentimes makes me wonder if there is a place within a law firm for a high-level risk manager type of a person, and whether that would make a law firm a stronger, safer place to work. And I don't know if you've ever thought about that, or if that's something that you've ever considered when talking to lawyers or law firms.
There's risk in every business, so I think you're probably your best advocate until the organization becomes large enough to kind of warrant somebody to to think about risk all the time. So depending on the size of the business, absolutely. Some of the larger law firms, I'm sure, have folks dedicated to risk management.
What is risk? I mean, so everyone here, I think, thinks, okay, risk management is how do we keep loans from not defaulting?
Sort of.
But
here.
there's so
That's
much
part
more
of it
to
here,
right?
Yeah. It's certainly part of it. It's a big part of it here. But if we weren't lending money, there'd still be risk for somebody to think about. And lots of organizations that aren't lenders have chief risk officers or risk management, just general risk, kind of enterprise risk. Could be risk of, market risk, depending on what you're working in.
Or compliance.
Could be compliance, right? Yeah.
Expenses. I know that you spend a lot of time making sure that the things that we're spent, because we spend $100,000, more than $100,000 a month, probably just on data.
Yes.
And, And one part of your job is to actually make that number go down as our application volume goes up. And that's again, it's a difficult thing to try to manage.
Yeah.
And that also is an internal risk area that I think law firms probably could use as well.
Yeah, absolutely.
As expenses sort of balloon
risk.
out of control.
Absolutely, yeah.
So there's so much to it. Well, I want to thank you for joining us, Joe. It's been great talking a little bit about the way in which the law firm and small business risks sort of intertwine. And obviously having you here as a psychologist, every lawyer or law firm that applies for a loan knows that they're going to be fully and completely psychoanalyzed from beginning to end by you. So you're looking right here at the psychologist behind the entire system. Thanks so much. We really appreciate it.
Thank you.
Thank you for joining us. This episode was sponsored by LevelEsq.